Hi everyone. So I'm Karen Rosnick with GOBankingRates, and we have a really special guest. What a treat. We have the one and only Tony Robbins here.
That's me.
I know. Look who's here.
Nice to meet you.
Oh, so nice to meet you. We are
me on,
so
Karen.
thrilled that you're making time for us.
My pleasure.
I know you're really busy because you are a New York Times bestselling author, Money Master the Game, which was a great book. A big read, but you've come out with a little bit more digestible read. This is Unshakable, Your Financial Freedom Playbook. So this is your new book,
Yes.
and it's out right now. So, go pick it up. But we want to encourage people to write in comments. So Tony's going to be with us for a while. And if you write in your comments, we'll read them
us
on
your
air.
questions. I'd love to hear your
Exactly. Tony is dying to answer your questions. So one lucky viewer will then maybe win this book. But definitely go pick it up. But we want to talk about Unshakable because we were just talking a minute ago about the market being pretty bullish right now. Things are looking good. So this book is all about, basically your fears of investing. And you're talking about the markets being good for a time, but there is that ebb and flow.
Yes.
So why is it necessary to read this? Why did you feel you need to write it?
Well, I hate writing books. I like writing books as much as pulling out my eyelashes. I didn't write one for 20 years, and I wrote Money Master the Game because I watched in 2008 people losing half of their net worth, losing their homes, losing, half of their 401ks, and it made me crazy. And so I interviewed 50 of the smartest financial people in the world, from the Ray Dalios, the Carl Icahns, the Warren Buffetts, and I put into this 674-page tome, which became the #1 New York Times bestseller because it wasn't me. It was the best investors on earth telling exactly what to do. But what I've seen the last few years is so much fear. Because we're in the 8th year of our bull market.
Yeah.
And that's the second largest bull market in the history of the United States. And so everybody knows there has to be a correction. It's coming, but nobody knows when. And so what I wanted to do was, I see so many people waiting because they're afraid, like, oh my God, the market, you hear every day, we broke another record on the Dow. But when you actually do the homework, you can get out of your fear and you can become an investor. If you've never invested in your life, I want people to know that the next crash is something not only you want to protect yourself from, and that doesn't mean just stay out of the market, but you want to take advantage of it. And the reason is because if you are a millennial and you've got so much debt from college and you're thinking I'll never get through it, the greatest opportunity in your lifetime to leapfrog from where you are to where you want to be is when that crash happens, because it gives you the opportunity to own things. It's like buying a house right now is really hard because everything's overvalued, but when it drops 50%, you're going to have a great opportunity. The problem is most people aren't prepared and they're scared. So if they hear the market's dropped, they want to run for the, for the hills, so to speak. But here's what you need to know. Every single year since 1900, we've had a correction. That's 116 years. Last year it was January. I don't know if you remember. It's the worst January in the history of the stock market. We lost $2 trillion, and we ended the year at record-breaking pace. So what happens is 80% of those corrections never become a crash.
Can you explain what a market correction is in case people aren't sure?
Great question. So a correction is any time the market drops from its peak by at least 10% and up to 19.999. Once it hits 20%, it's considered a crash, 20% or more. It'll go to 80%. So we get a crash about every 5 years. So we're overdue for it. So I wrote this book because it is your opportunity. If I asked you what your favorite car was and you said Ferraris, and I said they're on sale for 50% off, you'd be pretty damn excited. Mm-hmm. But when the stock market goes on 50% off, people panic. Right. So what I really want people to see is there is a way to win at this game, but you got to understand the dynamics. Kind of like, humanity was stuck. We were wandering through the wilderness, as hunter-gatherers until we learned the power of the seasons, to recognize the pattern of a season. Because if you do the right thing at the wrong time, you don't get rewarded, you get penalized. If you plant in the winter, it doesn't matter how hard you work. So what I wanted to show people is teach you the immutable laws of the marketplace so that you don't get hurt, so that you can take advantage, so you can leapfrog to a place you've never been before.
Well, exactly. And I think one of the best things you quoted my countryman Wayne Gretzky about taking shots. You miss the shots you don't take 100% of the time.
That's right.
So basically, you just got to get in the game.
Now, why don't people though? They don't get in the game because they're afraid of the crash, or they say, I'm going to hang on to my money so that when it crashes, I'll be able to buy more. But when the crash happens, if you don't have the guts to get in now, you're not going to have the guts when it drops 50 or 60%. And that's what people don't get in. So here's what I try to show people. It's really valuable. See, if you are in a position where you're trying to time the market, Warren Buffett told me, he said, Tony, the only reason for market forecasters like on CNBC is their job is to make, people that do fortune telling to look good, he said, because nobody can match the market. No one knows where the market's really going to go. But here's what you can know. There was a study done at JP Morgan. I just spoke at their JP Morgan Alternative Investment Conference where there are 400 people and you have to be a billionaire to attend. It's a pretty wild environment. So JP Morgan did a 20-year study and Charles Schwab did a 20-year study separately, and they both uncovered the same details. Here's what's interesting. You're trying to time the market. I want to hang on to my money. I want to get it at the right time, the wrong time. Nobody can, but here's what they found. If you miss just the top 10 trading days in the last 20 years, then instead of having an 8% return, which is what the market would have brought you, you got half of that, 4.5%. If you miss the top 20 trading days in 20 years, just one day a year, you're out of the market because you think you know timing better, or you're trying to avoid a drop or an up, then your return dropped to 2.1%. You might as well have a bond. If you miss the top 30 days in 20 years, just 30 days, 1.5 days a year, you made no money. So you can't afford to not be in the market. But then people say, yeah, Tony, but what if I get in the market tomorrow and it crashes? Great question. Schwab did a study on timing. And here's what they did. They said, let's pick one person and let's put them in the market the best day. The market crashed to the lowest level. You bought on the lowest level and it went up. Then let's take another group. They got the worst day. They bought on the day the market was at its peak and the next day it crashed when you owned it. Third person did dollar cost averaging, which means they invested the same amount of money every month regardless of the price of the stocks. That averages them.
Right.
And then the fourth person is cash. Well, who did the worst? Cash. They're annihilated over 20 years. They've got nothing to show for it. The person who got the best timing does have the most money. But here's what's wild. After 20 years of investing, the person who got on the worst day is only $14,000 behind the person on the best day. Your only mistake is to not be in the market. Now, when I say the market, you don't want to only be in stocks. You need asset allocation. You need diversification. But the stock market has provided the highest return for 2 centuries. It's also the most volatile, which is why you got to do what I teach here to protect yourself so you don't have to get hurt.
Great tips. Now, Tony, speaking of stocks, I don't know if you heard about this little company called Snapchat or Snap.
Yes.
I don't know if you heard about it. Anyway, makes you look silly, makes you look like a puppy or something.
I
hear it's all the rage with the kids. So, we have a question from Sarah. You ready for this?
Yes.
Investing in tech companies seems to be hot right now. How do you discern what's trending from a wise investment?
It's a great question. If you don't know, don't make the investment. It's like they say, if you're at the card table and there's always a sucker there, if you don't know who the sucker is, it's you. So you don't want to invest in something you don't understand. It sounds exciting. It could go up really high. It could drop really low. What you want is diversification. You don't want to eat as good as Apple is. You don't want to just own Apple. You want to own the index. You want to have the cheapest investment so you're not being overcharged, but you want to have a diversification. So for example, where do most people put their money? They put it in mutual funds. Well, an active mutual fund, it makes logical sense. You got a life, you're busy, you're working. You don't know how to pick finances or how to pick stocks. So you go to a mutual fund, somebody there gets paid to pick a series of stocks. They put it together, you pay them. Sounds smart. It's not. 96% of all mutual funds fail to match the market over any 10-year period of time. Only 4% do it, and that 4% is always changing. In fact, have you ever played blackjack?
I have.
So if you're watching, you know how to play. You play to 21. If you go over 21, you bust, you're dead. You get 2 face cards worth 20. And your inner idiot says, I think I get an ace, hit me. You have an 8% chance of getting an ace. You got a 4% chance of getting the right mutual fund. The problem with a mutual fund is, the reason they can never beat the market is they charge you so much that it takes away the benefit that you would normally get. So the average person doesn't know what they're paying for a mutual fund, but if you ask them and they think they know, they've heard 1%, because that's what people in the business tell you.
Right.
That's called the expense ratio. But there's 17 other fees. So according to Forbes, the average mutual fund costs you 3.12. Now, some people watching are going, who cares? 3%, 2%, 1%? This is boring. No, this is your life. You got to pay something. The average is about 1%. But if you're paying 2% or 3%, every 1% you pay above the bottom level that you need to will cost you 10 years of retirement income. So if you pay 3%, you're going to lose 20 years of income. I'll give you an example. If you got $100,000 you saved over the course of your life and you're 35, you put it all in the stock market and you leave it there and you get an 8% return over 30 years, which is easy average. Take a look at that and you say, what do I have at the end of 30 years? Well, if two people did this on the same day, put the same money in, but one person is being charged 3% in fees and one's being charged 1%. They own the same stocks. It's just who you're doing it through. The one who had 3% in fees, their $100,000 over those 30 years will grow to $432,000 without adding a dime. Pretty cool. But the person who paid 1% in fees has $762,000 and they own the same stocks you did and they have 60% more money. So you cannot afford to let these fees compound and they eat away at your well-being.
I think most people are completely ignorant of fees and they don't know, how do you find out where the fees are and how much you're paying?
Well, let me give you the plate where most people have their money is their 401k.
Right.
More people have a 401k than even own a home. So that's when I was talking to Jack Bogle, who created Vanguard. It's a $3 trillion with a T, $1 trillion organization. He's been in it for 65 years. He said, Tony, I know you really care. Where you got to put your focuses on 401ks. Because for 40 years, 35 years in the 401k industry, they didn't have to tell you what they charged you. Can you imagine going like into a store, buying a bunch of things and say, just leave, we'll just bill you later. And they never tell you and they take as much as they want. And they make you, in fact, 72% of Americans think they pay no fees on their 401k. And that's a total lie. You pay total fees and fees matter. They determine how much money you're going to have or not. In fact, of the balance that know they pay a fee, 92% don't know what the fee is. And the reason is, for all these years, they didn't have to. Well, 4 years ago, the government changed the rules. They said, hey, mutual fund companies, this is absurd. You have to disclose what you're charging people. So how did the industry get around it? They built these 35 to 50-page documents as disclosure items that if you have a PhD in finance, maybe you can figure it out, but you probably won't. So people still have no idea what they're paying in fees. President Obama, excuse me, in the Department of Labor tried to pass a law because they found that in the 401k space, the abuse was so bad that people are losing $17 billion a year. But now, the new president's in and he's not going to push those laws. And even if he did, excuse me, the lobbyists kind of watered it down. Even if you put it through, it wouldn't be there. So the best thing you got to do is educate yourself. And you can go to showmethefees.com. And I have a company there called America's Best 401k. They came into my company and showed me how to save $5 million for my employees. And we don't pay a penny of those fees, but we have all the same stocks that we had before. So you can go there, you can plug it in, it'll tell you what you're overpaying, and it'll show you what it costs you over the decades.
And even if you don't know how to do that, or you should know how to do that, but even just knowing, there are fees, and you need to ask, what are the fees I'm paying?
Yes.
There you go.
And you will not get a straight answer.
And you won't. So then that's why you go showmethefees.com.
That's right. You won't get a straight answer because these people the people you're dealing with, there's 310,000 financial professionals here in the United States. According to the Wall Street Journal, they have 200 different names because they want to sound impressive. Wealth manager, senior wealth manager, private wealth manager, financial advisor. 90% of them are brokers. Now, there's nothing wrong with a broker. A lot of brokers are really good human beings, but they work for the house and the house always wins. They sell you what the house tells them to sell you. And they might even own the same product. But these corporations, they're not evil. Their job is to maximize their shareholder profit. And the way to do that is charge you more fees. And the way to do that is have you not know what the fees are. Because if you know, you might upset. So they've worked really hard to create this system. There's only 31,000 out of the 310,000, 10% of them are known as fiduciaries, a new F word I want to teach you. Big word, but here's what it means. Normally, if you deal with someone in the financial world, you would think they have to put your needs ahead of their own, like your lawyer has to, like your doctor has to. Well, if you live in the UK or you live in Australia, everyone is a fiduciary in the financial business. We're the only business where only 10% are fiduciaries. So in my first book, I told people, find a fiduciary because they have to look out for you. If they tell you to buy Apple this morning and they buy Apple tonight cheaper, they've got to give you their stock. That's how powerful the law is for that group. So I did this site where people could go, they could find out what they're really being charged. And then if they wanted to work with a financial professional, I recommended a fiduciary, somebody who's the best in that area. And I recommended 10 different firms, and I didn't take any money. Just like the book, I donated 100% of the money to Feeding People, Feeding America. A year after I wrote the book, Peter Mallouk, who's my co-author in this book, started creative planning. He calls me up and says, Tony, I know how much you care about people, but there's a bunch of people on your platform that are abusing it. They're in the gray area of the law. So he came out and sat down with me. He says, Tony, it's crazy. There's this thing, this little gray area in the law where someone can look you in the eye and say, are you a fiduciary? Are you someone who has to put me first? Like, if you sell meat, you're going to sell me meat because that's how you make your money. But if you're a dietitian, you get paid for your advice. You don't sell me products, because if you sell me products, you're making money. You got an incentive to do that. You're only being incented to give me the best advice. Well, these fiduciaries, these 31,000, I found out that most of them, 26,000 of them, are duly registered. What does that mean? It means they can tell you they're fiduciary, and then in the middle of the conversation, they can change hats and be a broker and sell you an undervalued product, a product that's a weak product just because they get great commissions on it. So there's only 5,000 people in the entire United States that are true fiduciaries. That's 1.6%. It's crazy. And then amongst them, some are not very competent. They're good people, but they're not skilled. So you need a fiduciary who is highly skilled. So that's why I partnered with Peter, because I kicked everybody off the platform and I said, Peter, look, you're the only guy to be rated #1 by Barron's 3 years in a row, #1 by CNBC. And so I said, but I want something different from you. He currently takes care of billionaires, millionaires, and he does this thing called a family office, where he doesn't just show you where to your money, but he watches your taxes so you keep more money. He gets your mortgage cheap. He does all those things, a team. He built a team for people that are like doctors and lawyers, people with $1 million. I said, what if I got you to build a separate division? You won't make money on it, but these people become clients long-term, some of them, for people with as little as $100,000 or $50,000. And I got them to do it. So if you want to, I want you to know, first of all, I'm on the board of Creative Planning, #1 rated firm. I'm his partner. And if you go to his firm and do business with him, I'll benefit, so you're clear. But he'll do a plan for you if you just go to getasecondopinion.com. He's the #1 rated firm. Getasecondopinion.com. Tell them what you want. They'll put a plan together for you. And if you want them to implement it, you become a client. They charge less than 1%. If you are wanting to do it yourself, you can go implement the plan yourself.
Awesome, great tips. Now, we have to get to some questions here.
Please, let's do it.
So, in your book, Unshakable, you talk about being an owner versus a consumer. What does it mean to be an owner of the economy, from Camille?
Well, Camille, that's a great question. Thank you for asking it. Listen, I don't reach in my pocket here. If you own one of these, an iPhone, and you don't own Apple, you just made the biggest mistake of your life. And don't get me wrong, I don't want to just buy Apple, but you want to own American business. You don't want to be just a consumer. You want to become an owner. Now, how do you do that? Most people say, Tony, I don't know where to invest or where to start. Listen, this little book will take you 4 hours to read. You can do it over a weekend. You can do it in one night. It doesn't matter. Yeah. But at the end of this book, you're going to know what the 1%, the 0.001% know about how to protect yourself and how to maximize your finances and how to use the smallest amount of money to get there. But what you really have to be able to do that's really, really critical is you've got to be in a position where you understand that the rules of the game, if you get into finance and you don't know the rules of the game, I'm sure you've heard the phrase that when a person with experience meets a person with money, the person with experience ends up with your money and you end up with the experience, right? So to avoid that, you really have to be able to understand what the rules of the game are. You've got to understand what fees really mean. You've got to be able to understand what we're talking about here in terms of, is this person really, are they duly registered, or are they only looking out for your interest?
All right. Speaking of investing, okay, we have a question from Laura. How much should we be putting away for retirement in an investment fund?
Okay, well, that follows up the last conversation. So the most important decision to become the investor, be an owner, how do you do it? I don't care if you're broke. I don't care if you're building a business and you need every dime in the business. You have to do the one thing that'll make you wealthy, and it's a small thing. You have to take a percentage of your income, no matter how little it is, and take it off the table and automate it so you never see it. It goes straight to an investment account. Where to invest it we can talk about next, but first, you got to become an investor. To do that, you've got to have a consistent investment. Now, it doesn't matter how little it is. I mean, if you start out with 5%, there's a cool technique I learned from a man who's a behavioral economist, and he was nominated for a Nobel Prize for this. He took a bunch of people who were blue-collar workers who had no money, said they'd never invest. He got them to save 3.5%, because you can take 3.5% off and no one will notice, right? But then he got them to commit to save more tomorrow. Everyone will diet more tomorrow. Everybody will save tomorrow, not today. So he had them go to their employers and say, every single improvement, every salary increase I get, the first 5% is going to go in this account. Well, in 13 years, the average person was saving 15%. Well, look, if you save 15% and you invest it over time, because of compounding, it'll be worth a fortune. I'm going to give you an example. If there's a young man who's 19 years old, his dad convinces him to save $300 a month. Seems like a lot, but once you do it, it'll just be automatic. You'll forget about it. That's $4,000 a year. He does it from 19 to 28, so for 9 years. Only puts in $35,000 in total. That's what accumulates over that time period. He stops investing at 28 years old. How much will he have at age 65 if it grows at 10%? That's what the market's done over the last 30 years. If it does the same thing, this man's $35,000 will grow to $951,000, just under $1 million. That's the power of compounding. You don't need a lot of money. You got to get started. Now, his friend waits till he's 29. He invests $300 a month, and he does it every year till he's 65. He puts almost $200,000 in, he still doesn't have $1 million. You need a little bit of money and some time.
Okay.
That's what'll do it for you.
I have to stop you there.
Go for
I
it.
know. I wish I was still 28. I'm not. What if you don't have the time? What if you're, kind of feeling like you're playing catch up? What can you do, like the 35 to 45, 50-year-old investor?
That person can do it. I put in here examples, 35, 45. You can do it easily. You're still a young kid for the compounding. You still got 20 or 30 years ahead of you.
Right.
But what you have to be able to do is you've got to be able to know what the fundamentals are, the really basic fundamentals that are going to get you there. And what I do is I give you example after example until you're unshakable, until you're so confident, not based on some positive thinking, but based on the facts.
So even if you feel like you are playing catch up, you should still start.
If you don't start, I talk to people in their 60s, they go, I wish I would have started in my 50s. When they're talking 50s, it's 40s. 40s is 30s. I mean, so, how old are you, 12? Come on, give me a break. You've got plenty of time, but you got to get started now. The sooner you start, the easier it is to win.
All right. Thanks. I wish I was still 12 too, but no, I don't.
No, you don't.
Exactly. Who wants to be 12?
No, I don't want to be 12.
You can't vote, you can't drive. Okay, I could go on. But anyway, here we go. People say you need to have a diversified portfolio, but what does that mean? Robert wants to know.
Well, let's think of it this way. I interviewed Robert Shiller. Dr. Shiller is from Yale. He won the Nobel Prize in economics. And he did something interesting. He took every type of investment, stocks, bonds, commodities, real estate, and he laid them out to see what the overall returns have been adjusted for inflation for the last century. And what he found, by the way, was that your own home was one of the worst investments. Worse financially. It's a good one emotionally because you feel secure to have your own home. Mm-hmm. But because a home doesn't have income, over time, it's just a little bit of an inflation hedge. But other assets like stocks have had the highest rate of return, but they're also the most volatile. So you don't want to put all your eggs in one basket. You don't want to, if the market drops 50%, you can't have all your money in the market and lose 50%. So what you want to do is diversify. And diversification means you want to be able to have, think of it this way, at a simple way. Think of it as a bucket theory. Some of your money is going to go in a security bucket. It's a bucket where there's very little risk, and because there's little risk, it doesn't make a big return. It's kind of like everyone needs a tortoise strategy. The tortoise versus the hare. It's really slow, it's boring, it looks like nothing, but because of compounding it, there's nothing, and then it explodes, right? As the decades go by. The other bucket you're going to put things in would be a risk bucket and a growth bucket. So you might put stocks or you might put, commodities, or you might put real estate. These are things that have unlimited upside, but they have unlimited downside. Versus the security bucket might be things like bonds or things that might sound more boring, but you have a guaranteed rate of return over a period of time. Smaller, but guaranteed. And you have to figure out what the balance is between how much do you keep in a security bucket versus a growth bucket. Everybody wants to go in the growth bucket, but then they lose everything and they lose the years. So it's that balance. And in the book, I show you these different asset allocations that some of the greatest investors in the world have done, so you can pick what makes sense for you.
And you don't need to be a pro at the stock market, basically.
No, not at all.
That's a very good point, because I think a lot of people get intimidated. We have another question here. I think this is a really good question for Unshakable, too. How do you not let your emotions dictate your actions when investing? And James wrote that question for us.
Well, James, that's why you really want to get yourself a partner. You want somebody who can talk you off the ledge. So if the market drops and you know it's going to drop. See, my partner, Peter Maluk, in 2008, before 2008, he told all of his clients, there's going to be a crash. A crash comes about every 5 years. So I don't know if it's going to come tomorrow, a year from now, 2 years from now, but it's going to come. So you and I need to be prepared and not fearful. And we're going to diversify. And so this is what we're going to do. So if the market drops 50%, you don't lose 50%. But more importantly, here's how you're going to win. When the market crashes, we're going to buy the stuff really cheap. We're going to sell some of our bonds, some of the stuff that's giving you a poor return, and we're going to rebalance. And he was so good at this that his business went from a $500 million business, which sounds really big, to $2 billion in 2 years with almost no advertising. And it's because he did so well that everyone told their friends. Their friends were losing money. They said, look what this guy at Creative Planning's doing. Look how much money I've made. So he's grown. So in the book, I made him my co-author so we could actually walk you through exactly what to do for 2008 so that you win just like his clients did. And by the way, now he's $23 billion in assets. Again, number one rated guy in the United States 3 years in a row with Barron's.
Wow, I think when I started investing, I was checking the stock market every day to see how my mutual funds were doing, and that was really stupid. So how often do you need to, maybe do you look at it once a year to rebalance?
Once or twice.
You set it, forget it, what do you do?
We tend to do it once a year. If there's a radical change, the market crashes, you might rebalance sooner, right? So let's say you had 60% security and 40 in growth, or 40 in security and 60 in growth. If the growth is stocks and the price of them drops, then it won't be 60% of your money anymore. It might be 40. This might be 60. So you'd sell 20 of this and buy stocks to balance it back out again. And that usually do once a year or after a big correction that might happen as well.
But not every day.
Every day will make you crazy.
Exactly.
Warren Buffett said that the stock market is a device that transfers money from the impatient to the patient. So the stock market's all about let go. I always tell people, you want to go live your life. You want to take 4 hours and learn this. You want to get yourself a great partner, and you want to check it out 15 minutes a year and adjust it, and you want this to just keep building while you build your life, your business, whatever you're doing, but it's going to give you that security and that stability. It's going to make you unshakable. When things are freaking out, you go, I got the money, I don't have to worry. That's really the goal. And it's designed, it's interesting. Men want to make more money usually for things. Women want to make more money for more time, less hassles. It's really fascinating. But whatever you want, you can have it. But if you don't have a plan, you're planning to fail. And the reason I wrote this book now is because we don't know when this next crash is going to happen. Mm-hmm. Will it be 6 months, 12 months, 24, 36? No one knows. But it's going to be sometime in the next 6 to 36 months. You want to be prepared. You can't afford not to be.
All right. Another question. Again, investing. What is the minimum amount you need to invest money wise to make a difference? Angelica wants to know.
Well, what's more important is how much are you going to need long term? So a lot of times you talk to a financial planner and they'll say, well, you need 10 times your income to retire. Mm-hmm. But really that's absurd because you're trying to put your money in an environment where as your investments, they throw off an income. So instead of you working, your income from your investments gives you your life without working, right? But the problem is, if someone tells you 10 times, that's a long time ago. You'd have to get a 10% return. Where are you going to get a safe 10% return in the world we're in today? So I tell people it's 20 times, right? So if you made 100,000, you need 2 million. And so in order to do that, people go, I'll never get to that number. It's too big. So what I do is I show people instead how to have a set of short, medium, and long-term goals. So the first goal for everybody isn't financial independence and freedom. It's just financial security. What would that look like? I say to people, how would you feel if you never had to work again as long as you lived, and these 5 things were paid for without working? You never had to pay for them. Your mortgage for the rest of your life, never had to pay it again. All the utilities, all the food for your family, all your transportation needs, and all your basic insurance needs. If those 5 things were paid for without working, how would you feel?
I'd say, Tanya, sorry, I'm not coming in Monday. It's right here. I'm just kidding.
You'd still work because you enjoy working or you do something else.
Right.
And you work a little bit to pay for other things, but those 5 items are 65% less money than getting my ultimate goal. So if you get that first, you'll get momentum and now you'll go for the next goal. But when most people make up numbers that are so big that their brain goes, I'll never get there, so they never start.
I had to do an article one time about how to get to $1 million from retirement. I'm like, who can do that? So I think having that kind of, those attainable goals, tangible first, start with that.
Yes, for sure.
All right. You got time? You doing okay?
Are you doing okay?
All right. We still got time. We're just going to keep going.
Keep going.
All right. What are some daily habits you have that help your productivity, and how can I stay motivated and on track? From Allie. So,
good question.
Yeah, great question.
I'd say a couple things. I don't really believe in just motivation. I believe more in drive. Motivation's like a warm bath. I mean, we all need to take a bath, stay clean, but you need more than that. You got to find out what underneath you drives you. What is it that excites you? What'll get you up early and keep you up late? And if you don't have that, You want to get around where it's better. Let something hit you. Get around people that are passionate. Get around people that are successful, because something will suddenly trigger you and you'll unleash. But you got to find what your drives are. How I strengthen mine, though, is I'm always doing things because I know my mind is affected by my body and vice versa. So every single day, my original teacher was a man named Jim Rohn. And Jim used to say, leaders are readers. Every single day of your life, you should read 30 minutes a day, no matter what. Now, as time went by, I started listening to audio because I could do it with what I call net time, no extra time. When I'm driving in my car, you can't read, but you can be reading a book auditorily, right? Or while you're working out, or while you're cleaning the house, you got that opportunity. So I feed my mind every day, and I don't mean just going on the internet and looking at your Twitter or your Instagrams. I mean finding something that's going to challenge you, something to make you grow, something that's going to inspire you. Just 30 minutes of feeding that mind, because weeds are automatic if you don't feed your mind. And then the second thing is every day you got to do something, even if it's 10 minutes, to really challenge your body. I wake up and I jump in freezing cold, ice cold water at 56-degree cold plunges in all my homes. Sounds crazy, but I do it because, number one, it's incredible for your health. The Swedish people understand it. You get hot and then cold and it moves your lymph fluid, which is the sewage system of the body, cleans you out, makes you strong. But I also do it as a psychological trigger. I do it because I don't negotiate with myself. I don't feel like going to that freezing water. In one of my homes, I have a freezing river. It's in Sun Valley, Idaho, so it might be 38 degrees. And I jump in that thing in the middle of the snow because I teach my brain, when I say it, we do it. So as far as my daily practice, that cold plunge is a practice, not only that's a health practice, it's an energy practice. But when you say motivation, it's more than motivation, it's muscle. You know, you need emotional muscle. You need to be able to make yourself do what you need to do instead of negotiating and I want to do it, but I don't know, but I'm afraid. I don't give myself that option. I train myself, we do it now. And when you do that over and over, it just becomes a habit that you just do what you need to do. You don't hesitate.
All right, good tips. Cold tips. What is the biggest difference between your new book, Unshakable, and Money Master?
Well, the first difference is...
we have it over there too.
Yes, I'll show you.
Grab it.
Here is Money Master the Game. You can build biceps with this baby. This one you can read in 4 hours, right? So this one was, I really wanted to write a book that would cover every aspect of finance from the day you start to where you want to go, where billionaires would get value, because in this book I have the interviews with 50 of the richest, smartest financial people on the face of the earth and how they did it. So billionaires read this book. In fact, Steve Forbes said that if there was a Pulitzer Prize for a financial book, this would win hands down, because billionaires get value and somebody just beginning gets value. But it's 674 pages. I hope you'll go pick this up too. But I wrote this book really just say, here's how to take advantage of what's coming. I want you ready. I want you prepared. I don't want you to have any pain. And more importantly, I want you to leapfrog financially from where you are. I'll give you an example of how this happens. Most people remember Jack Kennedy, our president. Joe Kennedy, his father, in 1929 had $3 million. In 1932, he had $180 million. That kind of jump happens because when things melt down, they melt down faster, and you can make more money faster during a downtime than you can growing things. It's like the World Trade Centers, burn it down in a few hours, takes a decade to build the damn thing, right? So this is an opportunity to take advantage of that and make this the best time of your life. And again, 100% of the money from this book, $5 million, is going to Feeding America. We're going to feed 50 million people, and then I'm providing additional matching funds to feed another 100 million people. We're going to feed 1 billion people through these books and our efforts together. So Change your life and help somebody else. Everybody who gets a book, we're going to feed 50 people for each one.
That is so amazing. That is, that's truly amazing. I read that in the beginning of the book. So buy this book, feed hungry people around America.
And feed yourself, turn your own life around.
Exactly. Let's see. Getting your advice, what are some other resources I can go to learn more about investing? Do you suggest other educational workshops? Lori.
Absolutely. The more you can educate yourself, the better. Just make sure whoever you're educating yourself with has actually done it. So nothing worse than like going to a doctor who's overweight and telling you how to get fit or how to get healthy. Or, you people go to psychiatrists all the time. They're on Prozac and Zoloft because they're depressed, and they're going to coach you on how to do better. You want it. Very few people in the financial world, unfortunately, have done really well. You don't want to go to a salesman. You want to get somebody who's done it. That's really what you want to do. But we have a site called unshakable.com. If you go there, I've done some free podcasts for you there. And if you go to Unshakable also and you decide to get the book and you bring the receipt back from Amazon or wherever you get it, Barnes & Nobles, we've got some digital products that we give you for free as well. But the podcast is free as well. I just want to give people as much as possible and make it go. But the reason I still got the books, I want to feed people, and this helps provide that as well.
All right, great tips. We are so thrilled. We're going to announce a winner now.
Okay, cool.
All right, so we have a winner of this book, Unshakable, Your Financial Freedom Playbook, and it is Marissa Anguiano. I hope I got your last name right, but Marissa is the winner.
Great, I'll sign it for you.
Exactly, we've even got a pen for you. So there you go.
How do you spell Marissa's last name, or first name? M-A-R-R, 2 R's or what?
No, 1 R. M-A-R-I-S-A.
All right,
there
Marissa.
you go. Well, thank you so much for being here, Tony.
It's been my pleasure.
This has been such a thrill. And
Thanks for having
we are
us.
so excited over at Go Banking Rates that you're here and that we are just thrilled. So yes, go pick up Unshakable and learn about investing, learn about diversification, learn about Tony. And
Learn how to get financially free. You deserve it.
Exactly.
It's easy steps can get you there, step at a time.
All right. Thank you so much. This
Have
has
a
been
beautiful
great.
day. Thank
Yeah,
you.
exactly.